NVIDIA stock is currently trading at $186.23 per share, marking a slight decline of 0.44% in today's session as the market continues to digest the massive moves we've seen since the start of the year. While the headline numbers might look like a simple consolidation phase, the reality under the surface is much more complex than just a routine pullback. Most people look at NVIDIA stock and see a dominant force that can't be stopped, but what's actually happening right now is a tug-of-war between massive institutional accumulation and a growing concern over the supply chain for the next generation of hardware. Everyone expects the Blackwell series to carry the weight of the entire tech sector, but the hidden truth is that a critical shortage in high-bandwidth memory is starting to force a redistribution of where these chips actually go. If you are using a Fidelity trading platform or checking your Robinhood app today, you might see this small red percentage and think it's a quiet day. It isn't. The volume we are seeing on Interactive Brokers trading terminals shows that big players are repositioning. The expectation is that AI spending will just keep scaling linearly, but the reality is that we are hitting a physical limit of how fast these data centers can be built and cooled. This creates a fascinating tension for anyone involved in self-investing. You have the general market narrative telling you that NVIDIA stock is a must-own, but then you have the technical reality where the stock is pressing against a structural pivot. If you're looking at your individual brokerage account and wondering why the stock isn't $200 yet, it's because the market is waiting for proof that the upcoming Rubin architecture can actually be produced at the scale Jensen Huang promised at CES earlier this month. The recent intraday movement has been defined by a series of lower highs, which often signals that the initial excitement from the beginning of the year is meeting a wall of sell orders from those who bought in much lower. When you look at the activity on investing sites, the sentiment is still overwhelmingly bullish, yet the price action is hesitant. This is where the gap between expectation and reality becomes a trap for the unwary. The expectation is that the $500 billion backlog of orders will translate into immediate revenue spikes. The reality is that if the memory suppliers like SK Hynix or Micron can't keep up, that backlog stays a backlog. This is a classic example of why investment help is so sought after right now. Navigating the difference between a company's success and its stock's short-term performance is the hardest part of online investing. For those of you tracking this through your Fidelity mobile app or managing a Schwab Intelligent Portfolio setup, you've likely noticed that NVIDIA stock has become the primary driver for almost every tech-heavy index. When NVIDIA moves, it takes the whole market with it. Today's 0.44% slide might seem small, but it represents billions in market cap shifting around. We are seeing a lot of retail activity on the Robinhood app, specifically in fractional shares, which shows that the average person still wants a piece of this even at these prices. Meanwhile, professional traders on Interactive Brokers are watching the 100-day moving average like a hawk. There is a specific demand zone around $184 that is held up through several tests this month. If that breaks, the conversation changes from a buy the dip opportunity to a deeper correction. I want you to pause for a second and join the conversation. Comment below how many shares of NVIDIA stock you currently hold in your portfolio. Are you adding more at these levels, or are you waiting for a bigger pullback before you commit more capital? The tension in the market right now is also fueled by what's happening in the consumer space. Most people think of NVIDIA as just a data center company now, but the recent reports about the cancellation of the Blackwell super refresh for gaming GPUs is a massive signal. It tells us that NVIDIA is so focused on the high-margin AI chips that they are willing to let the gaming market stall. This is a bold move. It shows they are betting everything on the enterprise side. If you're doing your own online investment research, you have to ask if this focus is a sign of strength or a sign of being overextended. On the SoFi trading platform, we see a lot of younger investors betting that this won't matter, but the reality is that a diversified revenue stream is usually what protects a company during a downturn. Looking at the broader picture, the macroeconomic pressures are starting to weigh on even the giants, while companies like Apple stock and Tesla stock have their own specific issues with demand in China and interest rates. NVIDIA stock is unique because its biggest customers are other giant tech companies. As long as Microsoft, Google, and Meta have the cash to keep buying these chips, NVIDIA stays on top. But we are starting to see whispers of ROI fatigue from some of these big spenders. They've spent billions on hardware, and now their shareholders are asking when that translates into actual profits. This is the expectation versus reality moment for the entire AI sector. The expectation was that the chips would pay for themselves instantly. The reality is that building software that actually uses this power takes a lot longer than installing the hardware. If you use a Fidelity brokerage account or follow Fidelity Investments closely, you'll see that they've been highlighting the growth in sovereign AI, countries building their own data centers to keep their data local. This is a huge new market for NVIDIA. It's a different kind of demand that doesn't rely on the Silicon Valley venture capital cycle. This is a structural change in how nations view computing power. This is the kind of insight that separates a basic stock tip from a real analysis. When you invest online, it's easy to get caught up in the daily noise, but these long-term shifts are what actually drive the price over years, not just days. NVIDIA's business model is fundamentally about creating an ecosystem that is impossible to leave. It's not just the chips, it's the CUDA software that developers have been using for over a decade. This is their moat. Even as rivals on the Interactive Brokers platform try to gain ground, they are finding it nearly impossible to convince developers to switch to a different software environment. This is why the intelligent portfolio models still give NVIDIA such a high weighting. They aren't just betting on a piece of silicon, they are betting on a language that the entire AI world speaks. However, the reality of competition is changing. Startups like Grok and established players like AMD are finally starting to chip away at the edges, specifically in inference, the part of AI that actually runs the models after they are trained. Past performance for NVIDIA has been nothing short of legendary, with the stock up thousands of % over the last decade. But if you are using an individual brokerage for self-investing, you know that past results don't guarantee the future. The company recently reported fiscal results that showed data center revenue growing at a triple-digit clip year over year. That is a hard act to follow. The expectation for 2026 is that they can double this again. The reality might be a transition to a more sustainable, though still high growth rate. This transition period is often when the most volatility happens, as the hyper-growth investors exit and the value growth investors enter. Let's look at the catalysts coming up. We have the launch of the Rubin architecture later this year, and the first Windows on ARM chips featuring NVIDIA tech are expected to hit laptops by the end of Q1. If these chips can actually compete with Apple's M series, it opens up a whole new multi-billion-dollar market for NVIDIA in the PC space. This is a potential upside that many people on Robinhood stock trading aren't even looking at yet. They are too focused on the H100 and H200 chips. If NVIDIA can dominate the laptop market too, then the $4.5 trillion market cap we see today might just be the beginning. However, the risks are just as real. The geopolitical situation with China remains a massive wild card, with the U.S. government imposing more restrictions and the Chinese government trying to build its own domestic chip industry. NVIDIA is walking a tightrope. Every time a new regulation is announced, we see a massive spike in volume on Interactive Brokers as traders try to get ahead of the news. This is why having a solid investment strategy through something like Fidelity Wealth Management or a well-managed SoFi active investing account is so important. You can't just set it and forget it when the rules of the game are changing every month. In summary, what we are seeing today with NVIDIA stock trading at $186.23 is the calm before the next big move. The expectation of endless friction-free growth is meeting the reality of supply chain bottlenecks, physical data center limits, and shifting geopolitical landscapes. The market is currently trying to decide if NVIDIA is still the undisputed leader of the new tech world, or if it's becoming a victim of its own success, where its size makes it harder to beat expectations. We've looked at the technical levels on the Fidelity trading platform, the retail sentiment on the Robinhood app, and the institutional positioning on Interactive Brokers. All signs point to a period of high volatility as we approach the next earnings report. The central insight here is that the physical world, memory chips, power lines, and cooling fans, is finally catching up to the digital world of AI. NVIDIA is no longer just a software and chip design company, it is now a massive industrial giant that has to manage global logistics on a scale few companies ever have. This shift from a high-margin, asset-light model to a more asset-heavy operational reality is a change that investors need to account for in their valuation models. Whether you are using SoFi investing or managing your own Fidelity IRAs, understanding this change is the key to predicting where the stock goes next. Expectations were that 2026 would be a simple victory lap for NVIDIA. The reality is that it's shaping up to be their most challenging year yet as they try to transition to the Rubin architecture while keeping the Blackwell